Here we are with Ameen Soleimani. Ameen, welcome and thank you so much for joining me on the podcast.
Thanks for having me.
Yeah, so Ameen is the CEO and founder of Spank Chain. Spank Chain is a blockchain-based adult entertainment platform. He's also the co-creator of MolochDAO, a DAO to fund different Ethereum-based projects, and more recently, the co-founder of Reflexer Labs, which is behind Rai, a purely ETH-backed stablecoin. So very excited to talk about all those projects with you. But as always, I want to start out by talking about how you got into crypto in the first place, just your pre-crypto background.
Sure. It's a fun little story. It was like 2011, 2012 that me and some of my college fraternity buddies bought mushrooms on the internet from the Silk Road and had a great time. And it was an eye-opening experience. Unfortunately, we didn't buy as much Bitcoin as we could have. But, shortly after that, after graduating, I wrote a Bitcoin arbitrage bot. I made a couple dollars off of the arbitrage. I made $1,000 off of the Bitcoin bubble in Mt. Gox and then lost everything. And then I wasn't very rich at the time. It was, but then I sort of, walked away from crypto for a while and then only got back into it once I discovered Ethereum. And I thought it was interesting as a programmer, I could write code that ran on Ethereum. And I thought that was fascinating and could have, potentially large implications, and joined Consensus ultimately in the summer of 2016. And I stayed there for a little less than a year, did some fun work there. We worked on advertising stuff, worked on scalability, payment channels, state channels, those kinds of solutions. And then eventually left to start Spank Chain.
Nice. Okay, so interesting that mushrooms was what first got you into Bitcoin with the Silk Road. And I'm guessing, having programmed an arbitrage bot and then becoming interested in Ethereum because of smart contracts is your background. Are you a programmer by training?
Yeah. So I studied chemical engineering in college. And then afterwards, I was like, I want to learn something that's more on the cutting edge. And so I started teaching myself web development, JavaScript, SQL, that whole stack. And then when Ethereum came along, I started building dApps. So I started teaching myself Solidity. And then, you sort of have the whole, you still need all the rest of it in order to launch a dApp, right? You still need to make the UI and have the database and stuff like that. So
nice. So you're kind of self-taught on the programming side.
Yeah, self-taught software engineer.
Nice. Okay, so now fast forwarding, and we'll go back to talking about Spank Chain and the rest, but want to start off by talking about Rai, which I find is a really interesting and exciting experiment project. I don't want to kind of minimize it, but if you can kind of explain what this is and just broadly, as I mentioned, Rai is a stablecoin that's based only on ETH. And so first, want to start off by talking about why you thought it was important to have a purely ETH-backed stablecoin.
So I'll take you back to the beginning of Rai, which was my involvement in this. It's bigger than me, right? It's I'm just part of the group that is bringing this technology to life. I was frustrated last year, in mid-February around ETH Denver, because MakerDAO was starting to add lots of collateral. They're making lots of decisions, and I really appreciated DAI when it was single collateral, when it was just backed by Ether. It was less complicated, and there wasn't a whole lot of moving parts. And I thought that as they introduced other forms of collateral, especially collateral that introduces counterparty risk, like something like WBTC, it introduces a trust assumption to the system, right? If I'm a DAI holder, I am now downstream of the risk of WBTC blowing up. Because some custodian, something happened, right? So I thought that it would be, useful for me as somebody who primarily wanted to hold DAI, and useful for, Ethereum, to have something like that. And so I published a blog post called MetaCoin. And the MetaCoin blog post, I put it on the Ethereum research forum, got a lot of attention. And I put my design for how I would do MakerDAO. And part of what I wanted to do was also governance minimize it. So to try and take humans out of the loop for, deciding on the interest rates and stuff like that. So being backed by ETH is one part of it. Being governance minimized is another part of it. And they're both pillars of the same idea, which is to try and achieve social scalability by, getting the humans out of the loop. So you don't need to trust some group of humans. Like you sort of need to trust the MKR holders or, the Fed or whoever. To try and get as close to ETH moneyness as possible. And in order to do that, try to eliminate as many of the trust assumptions. So published this MetaCoin blog post. And then I got feedback from the original co-founder of MakerDAO, Nikolai, who's a super genius. And he was like, actually, this was my plan. I was going to create MakerDAO in this way. Originally, if you look at the white paper that we published in 2017, it's like this. But, I also have this other twist to it. And so in my original post, I was proposing to do the same thing that Maker is doing, where it's pegged to $1. And the interest rates would not be set by, committee or vote. It would be set by an algorithmic PID controller. We'll come back to what that is in a bit. But Nikolai is like, yeah, I had the same idea, but you actually can do this without needing to peg it to the US dollar at all. I was like, mind blown. Tell me more. How do I, and once I realized what he was describing, I was like, we have to build this.
So right now, Rai is pegged to this seemingly arbitrary number, right? 314.
So Rai is pegged to itself. Is the crazy absurd way that this whole thing works. And you're like, what? How does it peg to itself? What does that even mean? And so it's that we have two different prices for Rai. We have a target price, which we also sometimes call the redemption price. And then we have the market price, which is what it's trading at on the market. The market price is, up to the market. We can influence that, but we can't, decide that or, anything. The target price is initially arbitrary. And because we're nerds, we picked $3.14 per Rai to start with. From that point, Rai is pegged to 3.14, but the way that Rai influences the market price to try and get them to converge is that it actually moves its own peg in one direction or the other. And so it has another concept called the target rate. And the target rate is how fast the peg is moving, how fast the target price is moving in either direction. And what that is felt as by the participants in the market is an interest rate. And so just like, the Fed raises interest rates, lowers interest rates to influence behavior, Rai automatically updates its interest rates to influence the market participants to try and reach convergence.
Got it. Okay, so the interest rate is a reflection or a result of the redemption rate, right? And the redemption rate is how far Rai is straying from its peg of 3.14?
Correct.
Okay.
So right now it works kind of like a spring. We are using the simplest possible form of controller. It's just a P controller, proportional. And so that means the farther you move Rai from its peg, the faster it pulls in the opposite direction until the new equilibrium is reached. And so right now, the market price is, 3.2 something, and the target price has moved lower as a result over the last 2 weeks that Rai has been live. It went from 3.14 to about 3.07, 3% or so movement.
So the peg itself, okay, so I guess like this is part I didn't really get. The peg itself also moves. Like it's not 3.14 forever.
Arbitrary starting point, and there's nothing tying it back to 3.14 anymore.
Okay. So, but like, how is that a stable coin then?
So let me ask you a different question. What's the dollar peg to?
Okay. I'm not sure.
Right.
Yeah.
And it's not pegged to anything.
Yeah.
Right. And like, that's kind of the point, is that, when we think of stable coins, we think stability is dollars. Right? We're just like dollar stable, right? That's it. But that's not necessarily true. And like, there can be other definitions of stability. And so for the US dollar, they target an inflation rate. They target a 2%, or so low inflation rate and full employment. And they have, a consumer price index that they use. And so they say, okay, people buy this basket of things, cheeseburgers, toilet paper, et cetera. So long as the price of these things does not rise, by a certain amount, per year, then like we're safe in terms of inflation, and that's how we determine how much money we're gonna create.
Right.
And the creation of the money is downstream of them actually setting interest rates. They don't actually create all the money necessarily at once. But yes, so they do these things, and we feel that it's stable. But basically, the history of fiat currencies tells us that it is stable up to a point, and then it is not. If it hits the runaway inflation, then it's no longer stable. And so we're experimenting with crypto native stability. We're trying to figure out, can we stabilize something purely within crypto, stabilize it and reference itself, is the way we're doing it. As the way to do that. So to answer your question, right now, RAI is actually you could say our monetary policy for RAI is like incentivized inflation, incentivized, even hyperinflation. So like right now is not a great time to hold RAI because the interest rates per year are like negative 70%. And the reason they're so high is because people keep bidding up the price of RAI. And the reason people are bidding up the price of RAI is because they want to provide liquidity for Ether and RAI, because of, they want to participate in our rewards program. Because, they figured out, we've published that we're going to release some amount of liquidity incentives for the people who do that. And so they're making the bet that their rewards will be worth the cost that they might incur to hold RAI. But for everybody else who would just want to hold RAI and not participate in this,
it doesn't make sense.
It doesn't make sense. So we're at an interesting point of bootstrapping the system. And for a system like this to work, it needs people to short it when it gets out of balance. So in the same way that we would, a positive interest rate would encourage you to hold RAI, and it would make it more costly to take out leverage with ETH, because it means that your debt is getting more expensive. A negative interest rate means that it's less attractive to hold RAI because you're expecting to lose value, and that it's more attractive to take out leverage because your debt is being devalued. And so you can borrow RAI and sell it short and then wait for the peg to move further down and for the price to potentially move down, and then buy it back and profit the difference. And so
that's what people should be doing now that the rate is negative. They should be shorting it. But you're saying they're not because the incentives are kind of out of whack because of the liquidity incentive program.
Yeah. So my expectation is that, if we stopped it all immediately, then there might be some short-term pain while the market rebalances, but it would stabilize because we haven't created this shock in the system in a certain direction. But at the same time, because we're sort of subsidizing the people to create this market imbalance, we're creating this opportunity for the shorts to learn, how to arbitrage the system properly back down. And so I think it's a good thing that we are doing this, and we are training shorts. Like I see people like arbing it when it gets too high, and and then pushing the price down, and then buying it when it gets low. And
cool! So it's working.
That's what we were hoping to see, and that's what we're seeing. And it takes some time to bootstrap a system like this. We sort of exceeded our expectations a little bit because it attracted a lot of liquidity. There's about $250 million in Ether deposits in Reflexer right now, and about 100 million in loans, like in RAI borrowed. And then another, $200 million ish of liquidity on Uniswap of RAI and ETH, pooled. So 100 million RAI. Most of the RAI that exists is being, pooled on LP'd on Uniswap.
Got it. And that's just after what, like a couple of weeks since you launched. So yeah. So and there. I'm seeing 34 million total RAI issued right now. So that's
you multiply by 3.0 whatever, and then that would give you the
market cap. Yeah. So okay, so that's still obviously a ways off from DAI, right? Like DAI is at 3 billion today, and you in the post that you had like announcing this, you had some like really like big ambitions for this becoming like a global reserve asset at some point. So from there, from here to there, like what needs to happen? Like how do you see that progressing? I mean, first you need to win over kind of Defiant the Ethereum ecosystem, and then kind of expand to the world. So how do you think that can happen?
So, like most ambitious things, it's almost certainly doomed. But the upside is such that it's like worth trying anyway. Because if it does work, that would be like totally ludicrously awesome. So I talked in my post a little about the Triffin dilemma. And I actually, didn't really know what that was until I read, I was following MakerDAO, founders, CTOs. In my post, I pointed to Andy Milenius, former CTO of MakerDAO, who talked about, the Triffin dilemma, which in one of his MakerDAO presentations. And that is like basically this problem that the entire monetary system has, because we've decided to use one of the country's debt. So like their currency, which is all of our currencies are backed by debt because we're not, backing it with gold anymore. And it leads, you have the dilemma is that most countries, when they consider their central bank policy, they consider it for domestic only. They only have to serve their economy. They need to print, only enough money to serve their economy. But what happens is when you're the global reserve currency, you have to print enough money for the world. And it harms potentially your economy because then you have all of these outstanding dollars. You have created all of this debt, and your only way out of this debt is to devalue the debt by printing even more money. And this initially hurts your economy because in some ways it can make your economy less competitive because the demand for dollars is so high globally that your exports can't keep up because the exchange rate. I can get cheaper stuff somewhere else, so I don't go to the U.S. to do it.
Right.
And it's the central bank governor of China, Andy pointed this out. He said in 2009, like, we should try something else. He was like, this system leads to booms and busts. It's not, it might not be our intention to create booms and busts, but that's definitely a feature of the system. And if we could, we should strive for, international monetary reform by creating a reserve currency that is not any one country's debt. Now, his plan was to use the International Monetary Fund to add a lot more money to the special drawing right, which is a sort of basket of currencies split up, some dollars, some euros, and some different countries' currencies, and then have some governance system that decides on the weights and the issuance schedule and who gets it and stuff like that. And I think that's cool, but like it didn't go anywhere. Like in the 10 years that the SDR has existed, it went from like $200 billion to $300 billion. And in the 10 years that Bitcoin has existed, which was published right around the same time and came out in 2009-ish, white paper a little earlier and so forth, Bitcoin's gone to $1 trillion market cap from zero.
Interesting. Yeah.
So like there is something to be said for global networks, grassroots coalitions of people all across the world to get together and decide what we want the future to look like. And so, the aspirational goal of something like RAI is like maybe in 5 years, 10 years, Ethereum's, I don't know, become the like world's computer. It's like settling all the CBDC, central bank digital currency chains. It has gone from like CryptoKitties to, the world infrastructure. Then like maybe a stability widget on top of Ether, like can serve the demand for a stable reserve asset. And that's the huge goal, right? And it's like, how do you get there, right? It's like, make it work for DeFi, make it work for our fellow nerdy friends. And that goes through stages, bootstrap the economy, teach people how to long, short, maintain the peg, the floating peg, so you can't actually break. But then we, try to integrate horizontally with as many platforms as we can, create more use cases for RAI, borrowing RAI, lending RAI. Right now, for example, you can only short it against Ether because you have to mint it with Ether. So you can, but if you had it on, Compound and Aave and Cream and other lending platforms, then you could, borrow it against your DAI or some other asset. And so that gives you more options on how to play the market. And the more diverse participants there are in the market, the stronger the equilibriums will be, because it's less likely that everybody will lean one way or everybody will lean the other way at the same time. And I think, it's like we've gotten to that part, and then it's like a bunch of question marks in 5 years, and then we'll like see what happens. Right. But the hope is that like all the central bankers are actually paying attention. So like in my blog post for announcing RAI, I pointed to the St. Louis Federal Reserve Bank, which published their own whole DeFi report.
Yeah, that was crazy.
Really good.
Yeah,
it was very thorough. And they mentioned DAI, MakerDAO, 31 times in the report. And I was blown away. I was like, wow, these guys are really paying attention. And it's possible that, maybe this works and becomes the thing, or maybe it inspires, central bankers and they can't run this experiment. And we're, in Ethereum, that's what we love to do. So we can, and if it works, then maybe they learn from it and maybe even they use it.
So, okay. So one like small question, on what you said, which, amazing, big vision. But so you said potentially the idea is to have to be able to borrow a RAI with DAI, but like wouldn't that go against kind of the reason for creating RAI, like not having to, like if DAI is already depending on like USDC and WBTC, I mean, would you want to kind of exclude any kind of non 100% like crypto native collateral?
I want to be careful because when I say borrow RAI against DAI, I'm not talking about including DAI as collateral in RAI. I mean, on other platforms like Aave and Compound that already support, collateralized lending with DAI, listing RAI as a place to, lend and borrow allows you to have a position with DAI that starts on that platform. We intend to maintain purity, ETH only for forever.
Okay, so you won't add any other type of collateral, even if it's 100% like crypto, no other like.
Okay. I don't know how you get anything else that is crypto. Ether is the only thing that we have that's programmable and has no, like, I don't introduce any additional risk by using Ether in my app because I'm already on Ethereum.
Right.
If Ethereum blows up, Ether blows up. If Ether blows up, Ethereum, But if I add, USDC, well, now I have to worry about, does Center get shut down? And, are they good for the money? And then DAI is like, well, did the maker holders mess something up? Or right, any other, asset that you could use on Ethereum introduces some sort of trust assumption.
Yeah. So, sorry, my dog was barking. I got distracted. Yeah. Okay. So that makes sense. So the kind of last question on Rai is the reason why DAI or MakerDAO added all these different types of collateral was to scale this thing. They assume Ether isn't enough to get this thing to scale to billions and billions of value. Is your way of solving that just assuming that Ether has like that big a potential, basically?
Yes.
Fair enough.
I think about half of the value in Maker is still ETH. And so, for all the other types of collateral, for all the conversations, maybe it like helped them 2 times. Maybe by the time they add even more collateral, like Ether also scaled up, and then it's still, half of it. But, it allows them to hedge against a future where Ether does not scale up fully to serve the demand for Rai or for DAI. They also need other types of collateral because then you can do arbitrage between the types of collateral. So for MakerDAO, one of the sort of fundamental challenges of having the $1 peg is that they can't have a negative interest rate. There is the DSR, and the DAI savings rate, and the stability fee that is charged to the CDP openers, the vault openers who deposit their Ether and borrow DAI. They pay, some percentage, 2, 3, 4% to borrow. And then the DAI holders, if they lock their DAI up, they can receive, rewards from that. I don't think they're doing it right now, but they did last year for a bit. And the way that Maker is able to, get the price of DAI up, if it's below the $1 peg, like 0.95 or something, is they can increase the interest rate. And increasing the interest rate makes borrowing DAI less attractive. And so the people who have will buy it on the market and then pay it back their debt and move on. And that buying it on the market is what they incentivize. And then that, helps bring the price of DAI back to $1. They can't do the same thing in reverse. Because they cannot charge all the DAI holders and pay all of the DAI borrowers because they don't have a good way of decrementing your DAI in your wallet. And because they're maintaining the peg, they can't do what Rai does, which is just decide that the currency is now, the peg is lower and we've devalued it. So they don't have the ability to devalue it. And so we can get away with not needing multiple types of collateral to provide these arbitrage opportunities, which, like, for example, I don't know, Samyak from Instadat did this crazy thing where he just triple leverages his USDC. So he puts a bunch of USDC into DAI, borrows a bunch of DAI against it, and then sells all the DAI for more USDC, locks it up, gets more DAI, does that whole loop and is shorting DAI using this other type of collateral, right? That allows him to mint and do that. We wouldn't be able to do that, but what we can do is we say there's a negative interest rate, and that should influence the market participants to correct.
Yeah, and I mean, still, I think TBD whether in practice how that works. The fact that you can like devalue your currency and have people kind of accept that as a means of payment, for example, because I think it would have to be like pretty ingrained in DeFi for people to start, for example, I don't know, paying salaries in Rye. Like it would just have to be like a very kind of integral part of the ecosystem for you to accept, like my salary might kind of move on like a dollar basis, right?
I agree, and I want to point out that we don't expect these negative rates to last forever. This is not like a permanent feature of Ride. This is a bootstrapping phase, right? Once we are out of the bootstrapping phase, I expect a different equilibrium. I'm hopeful and optimistic that once those sort of incentives are like completed, the bootstrapping phase is done, then people will it'll reach an equilibrium where Rye might actually have a slight positive interest rate against the US dollar. If for Rye to have a negative interest rate compared to the dollar means Rye is actually inflating faster than the dollar.
Right.
Right. Yeah. And so we can say, dollar inflation, but we're like, and we're actually even, hold my beer, Federal Reserve, like you guys want to do 2% interest rates per year? Like we've got like negative 70%. But that's just a feature of the bootstrapping phase. Hopeful that once that's done, we actually see Rye more stable and possibly have positive rates relative to the dollar, and that you ask me like, how does Rye get there? And it's like, maybe Rye doesn't have to do very much. And this is actually a feature of many of the most prominent projects in Ethereum, where they just exist for long enough for the world to catch up. And then they get bigger. And so it's possible that like over the next 5 years, the Stable Act comes and maybe there's, more inflation and inflation ramps up. And then Rye, by virtue of those things, is able to get a more positive interest rate and, become a competitive hold. Right. And then it might, start to ingrain into the more store of value, like I will hold this, I will transact in this, I will settle my debts in this type of thing. So
it seems
very good points, though. Very good points. We are careful because we do not want to be like, oh, right, that's just a negative interest token. Like we're like, no, we're just trading the shorts.
Yeah, and on that kind of bootstrapping phase, can you say more about the Reflexer token, or like what's the plan with that? When will it be issued?
So we announced the FLX token and the token distribution for the liquidity mining. We have not finalized, when it's coming out. We hope to do it soon, but I don't want to give like a exact date. And then we have our an official liquidity mining program that'll start soon after. Right now, it's like a retroactive thing. So for all the LPs that have provided liquidity from the last 2 weeks, and I think it'll go on for I forget what the exact date was, but you can check the Reflexer FLX announcement and get all of the information about that.
Well, okay. I mean, this is all mind-blowing stuff. So I'm just like interested to see how it all develops. I mean, very cool experiment.
It's real fun. Yeah, it's like a nerd's night because all the nerds love this stuff. Like this was, like I studied chemical engineering before I got into software engineering, and like most computer scientists don't really get into control theory, but most just like industrial, chemical, that kind of engineers realize that like all of the systems that almost all of our like systems that we keep stable, keep the temperature of this at this, keep the flow rate of this at that, keep your car cruise control, keep the drone in the air. These are all control systems, and we can use what we learned in these control systems to stabilize money. If you actually look, there was a paper, I think it was 2012, There's somebody looked at all of the different types of central bank policies that they have in order to decide on the interest rates. And the policies have different types of terms. They have terms that are relevant to the current, error between where they want to be and where they are, the historical error between where they've been and where they've wanted to be, and the expected error, which is the rate at which they're moving to where they want to be, and that. So these actually map exactly onto PID control. PID stands for proportional integral derivative. So proportional is like, what is the current difference between where you want to be and where you are? Integral is what is the historical difference, and then derivative is what's the rate of change of the difference, and based on the rate of change that we want. And so, in fact, central bankers have guess and check their way to using control theory to manage all these systems. And like, all we're saying is like, it's possible that the way that they're doing this, by keeping the human in the decision loop, is actually creating more instability than if they just let the algorithm run by itself.
It could be, yeah.
What if we just let the algorithm run? Let's see what happens, right? And so that's the inspiration of Ryan. That's what we hope to see what happens.
Wait, so okay, so I keep like wanting to go to Spank Chain, but then something else comes up. So like, if you want to take the humans out, then what's the point of a like governance token? I know you call it ungovernance, but like, what's the point of having?
That's a very, very good question. So in Maker, which we forked off of, the token has two distinct uses. One is deciding everything, the governance part, and the other is that it's the lender of last resort for the system. And so, if for whatever reason, the system goes underwater, it's undercapitalized, they have more debt than they have assets, what the system will automatically do is start printing MKR, and that will be auctioned off for DAI, and then that DAI is used to make the system whole. And so all of the MKR holders are sort of, the last line of defense, if anything goes wrong. So we still keep that part in FLX. And so it's important to keep that part. We call it ungovernance. It's a meme, right? Yeah. The reason we call it that is because we're trying to find the people who are aligned with our vision of ungoverning the thing over time. We are not trying to recruit the people who want to come in and make a bunch of decisions about stuff and like propose collateral and decide interest rates and right? And it actually takes skill to ungovern a thing, to figure out in which order do I remove the levers, what do I need to know. How much data do we need to collect in order to have confidence that like the thing can continue on with minimum human intervention for a while? And what is in the similar way that Ethereum has minimum viable issuance, we are trying to get to minimum viable governance. Like, what is the absolute minimum set of things that we can change, or we might need to change, and then maybe the FLX holders govern that. At the end of it, in a couple of years when we have automated the entire rest of the system. That's kind of the idea there. We want to ungovern. It's not easy. And we want to find the people that help us do that.
Okay. Got it. Okay, so now on to Spank Chain. Want to like know more about what the status is of Spank Chain. Like I interviewed you for my book, and included kind of the really fast growth that the platform had, and also like really interesting that it was like one of the first to use actually like layer 2 scaling with state channels. So what's kind of the current status of that? Like how's growth? How many people are using it? How are state channels working out?
Yeah. So we got, in 2017, there was basically nothing on Ethereum. In 2018, there was very, very few things. It was CryptoKitties crushed it, MakerDAO crushed it, and then we launched Spank Live, which was our payment channel enabled campsite. My bet was that payments and adult were going to be big adopters of this early on. It turns out that wasn't quite the case, and that crypto people really like collectibles and leverage, stable coins. So they were right. I was not as right. And so we ultimately, closed Spank Live because, bear market, the market sort of dried up for it. The payment channel stuff has continued on. Been super impressed with Connext's work. We partnered up to build the system for us and they demo it, and then they've sort of gone on, and now they're positioning themselves as the actual layer 3, where you can do swaps between other layer 2s instantly through Connext. And I think that's actually probably where it makes the most sense. So we weren't even in 2017 when we were like, there's going to be a whole branching tree of plasma chains, man. It's we sounded a little nuts. But now, there's roll up this, the layer 2 that. It actually seems to be the right time. As for us, what we're doing now, we focused more on just making ourselves useful to the community. So we built Spank Pay. Spank Pay is a crypto payment processor. We have a bunch of merchant partners. We have a bunch of models. So it does both. So it's a checkout for, you go to Just for Fans. It's like a clip site. You want to buy some, adult content. Same as, PayPal or some other checkout system. You can pay with crypto and then they get it and they can decide, if they want to keep it in stablecoin or and whatever. And then the models, we offer them a personal payment portal. So you have spankpay.me / I'm Spanktoshi. And, you can see profile and tip me. And so we found that there are a good number of models that are using it for just receiving tips from clients, customers, people who are buying content from them, and helping them, the cool thing about crypto that most of their other platforms don't provide is the ability to cash out instantly because we don't have any chargeback risk. And so, we're encouraging them to get their own wallets and, we talk about decentralization and then, we have Coinbase, right? And it's we're trying to be like Coinbase, but in the same way that Coinbase is a bridge for all of us to get into the space. And then it's the first step towards sovereignty. We want to, help create crypto veterans. So maybe they don't need SpankPay as much anymore, but maybe they use it because it's convenient for example, connecting to their bank account or so forth, or stabilizing, their earnings.
Okay. So you're not a platform for performers anymore.
No, we're not doing the camera shows.
Okay. So, but now you are a payment system, like a crypto payment system for different sites that want to use crypto.
Correct.
And a way for models to get tips in crypto too. Okay, cool. And are you still using state channels for this or no?
We are not. We moved to a service provider. I think we're using Wire, Sendwire to manage the money and help move it around.
Okay.
I found that it was just more convenient. We had all of this crazy payment channel technology. It was super over engineered. We thought it was really cool. We got a grant from the EF for it. We put it into production. But ultimately what models care about is when I hit withdraw, how fast do I get my money?
Right. Makes sense.
So
and is crypto helping out, do you think, or is kind of the use case not really there for them?
I think it is. It's having some growing pains because of the scalability. 6 months ago, none of this was very popular. Suddenly, it's very popular, and so the transaction fees scale with the popularity. If for example it costs $10 to send an Ethereum transaction, which it did, for a couple of weeks ago, it doesn't make sense to spend $50. anymore to buy something. It still makes sense to spend $1,000 to buy something. And so we saw a lot of adoption with like FinDoms, financial dominatrixes, who have submissive subs that tip them thousands of dollars for being mean to them, essentially, or as a symbol of their worship. And we're trying to focus on that community and other sort of high value use cases. But right now, crypto transaction fees went down a bit, so like it's sort of okay. We're starting to see more smaller transactions again. And I think that we might go through like a crypto awkward teenager phase, where the thing that, the money that people have in their wallets is like, has too high transaction fees, but like people have money on this chain and that chain and like a bunch of scalable stuff that they want to transact with, but they haven't all gotten money there yet. The service providers that we're using to integrate don't support all of them yet, and so it might be 6 months to a year or something before we see, like, if we go full bull run and the fees get high, it might be dominated by these higher value transactions for a while.
Sure. So it's weird to me that or SpankChain was one of the first to use layer 2, but now you're not. Are you thinking of, or like, did you have like not a great experience because you said it was over engineered?
Yeah. So I think we might. Critically, what you need is like support from exchanges to onboard people to layer 2 easily, because otherwise you still sort of have the same problem, which is like, how do you get your money onto layer 2? And it's like, well, you've got to pay the layer 1 transaction fees to get there, right? And it's like, okay, well, that doesn't help very much. So if you could, for example, go from Coinbase to Optimism, an Ethereum layer 2, that would mean that many more people have money on Optimism. That would mean our service providers integrate Optimism. We would say, pay with Ethereum, Bitcoin, Optimism. You click Optimism and then, select your currency from that. And then we would support something like that.
Okay.
So, it's not that we don't like payment channels. It was that I was running SpankChain. It was not a payment channel company. My job, is just to build something that is maximally usable for the community that I was trying to bring on, the models and their customers, and kind of need to, I sort of stormed out the gate with SpankChain with the layer 2 stuff, like way in advance of everyone else, and then got exhausted, and then realized that like I could just wait, and it's a team effort, right? And it takes some time, and as these things build, there companies that are specifically focused on them as their mission, Connects, Optimism, others, that'll really be the key to bridging the gap.
Right. So for now, I guess like more infrastructure needs to be built until it's actually kind of useful and just like until it makes sense to actually integrate something like that.
Yeah, more infrastructure, more adoption.
Yeah. Okay, and then I wanted to ask you about the porn video that you posted.
Which one?
Well, I don't know. I just saw you on Twitter saying that you posted on like a video on Pornhub with one of like SpankChain's advisors, or some, right? I don't know. I haven't watched it, but so anyways, I mean, to me, it was just like, wow, like incredible that you're like a prominent kind of member of the Ethereum community. You've been here for a long time. I mean, you're like well-respected founder, but you can just like go ahead and post a porn video. And I don't know, to me, it was that like really marks a difference with just like the traditional world, like Web 2. If you were, in a traditional startup, I don't think you would be able to do that. And I don't know. And not like, I don't think you face like any backlash from crypto. So I just want to like hear your experience on like, why do this? And like, what was kind of the reaction, I guess, from the community?
Some people said they liked it. So we were like, hey, I really enjoyed that. Don't tell my wife. I was like, what, how's that?
I mean, is it weird to have like, I don't know, people in the community watch the video to you? I don't know.
I think what's weirder is that like we just have, you know, it's just the looming sexual repression, and like we don't talk about it just to like appease, you know, sort of like the religious fanatics among us. I think that's weirder.
Okay, talk about that. Like, I just like want to explore this theme, because you're right. Like, I don't know, we don't talk about it, and you're just like so out there with this stuff. So I want to know kind of like your motivation for it.
Well, the first part, it's fun. Like I enjoy doing it. It's like fun to make a video. It's fun, you know, to like pick a theme, write a script, you know, do it, and then you know, blast it and see people react. I enjoy it. Another part is like I kind of, you know, if you want to like normalize something, right, you kind of have to do it. Right, like if I'm, you know, here saying like sex work is, you know, fine, right, like it should be decriminalized. It should be, you know, we should try to destigmatize it. One of the ways that I can lend myself to that is to participate.
Wow. Walking the talk.
Yeah. And I think that, you know, porn is unique in its classification, in that it is art. And it's cool that, you know, that like we can, you know, hire people and create art, and yeah, it's sexual in nature, but it's a you know, a statement. It's you know, the statement is that this is fine. There's nothing wrong with this. And I think, you know, for that statement to be made, I sort of like, I don't have to, you know, I don't have to do this myself, but like if I do it and people see that there isn't that much backlash, and you know, so the way stigmas work, right, is that it's a mirage in everybody's head, and we all think that there's a stigma because other people think there's a stigma. And the way bubbles pop is when everybody realizes at the same time that other people actually don't care, and then you're like, why do I care?
It's like the emperor has no clothes, but like literally right. There's no clothes.
Yeah, and the way that sentiment of these things changes is not that you convince the sort of like existing rule makers who are old, and you know, they are the taste makers. They sort of, you know, they say, oh, this is bad, this is good, or whatever. No, it's that they die, and then our generation makes the rules, and then, you know, the norms reflect whatever we want.
So,
and like,
yeah,
you know, I would say it's like analogous to like, I don't know, Bitcoin versus like gold boomers, right? And it's like kids have been sending, you know, sexting each other since they were like 14, right? Like we really got to think hard even about the lot, you know, the stuff around that. It's like the culture is going to be very different, because it's going to be more open in some ways, and people are I think going to express themselves. And I think post-COVID, we're going to see a lot of activity in that kind of area, where people are excited to be united with all their friends, and you know, satisfy some of the desires that they might not have been able to all through quarantine. And I think that's healthy, and I think it's good. Yeah. And I hope everybody has a great time.
Awesome. Okay. And then the other thing I wanted to ask you about is, you mentioned kind of we stigmatize this to, I think you said something like to appease all the kind of like religious people, something like that. And it's just a theme that is in your work, like this gravitation towards God or divinity. Like in the right paper, you said this is like the money god. Then you like in MolochDAO, Moloch is some sort of idol too. So just wondering, like, why this inclination, I guess.
So I mean, I didn't choose for there to be religious fanatics. I was raised by one. You know, an Islamic one. We sorted it out. It took a decade. Now he's an atheist. Props.
Wow.
But you know, it caused a lot of pain. And you know, it's like, why? who benefits from this? And it's like, it ends up being the religion Ponzi or whatever that you try to get other people into it, and they, and then you just keep perpetuating it, and the Vatican gets $100 billion. That's like how that works. So, in my terms, I think it's powerful to like choose your own like belief systems, right? And I don't need to believe in like the canonical God, creator of the galaxy. There's only one. Doesn't like you worshiping idols, like jealous. Has all this baggage. You can believe whatever you want. Like for a lot of people, in tech, like Elon is their Jesus, right? We believe in Elon, we right, and he comes into the world with a view of like, how do we make the world maximal? How do we progress in a way that solves existential risk of being a single planetary organism? How do we? It's like, well, actually, we need to make rockets land. Like that's the engineering challenge of of doing this, and letting yourself get like still inspired by that goal. It's a practical goal. I think is really powerful. People are moved by superlatives, is one of his sayings. So with MolochDAO, I mean, it was fun because I just wanted to. It's like punk rock. I really did that entirely because I wanted more people to read Meditations on Moloch, the blog post. Because I found this blog post in 2016 when I was discovering Ethereum, right at the same time, and I was like, and the Moloch blog post is about it. It captures this phenomenon and it describes it as a god, not because it's a god, but because it's interesting to recognize it as a thing that is absolutely not a god and is absolutely only a human phenomenon, it's just us. It happens to animals and other organisms and stuff too, but and the point is that like Moloch is in rationalist circles the god of coordination failure. And so we want to work together on something, but the more people try to work together on it, the more incentive for somebody to defect and ruin everyone's day, right? And this happens like, countries, we all want to spend money on hospitals, schools, infrastructure, but we end up spending money on guns, bombs, planes. Because why? Because if we all tried to disarm, then we create the incentive for whatever douchebag to stockpile all the weapons, and then take everybody else over. And then they're the only remaining player in the next round of the game. And they decide the rules. So you end up with these like, unfortunate equilibria. And I wanted to like, focus on the fact, because a lot of times we start out sentences with like, if only we could all just, and like every time anybody said that, it's like a waste of your time, waste of everybody else's time. Because that's just not how things work. Things only progress when you can like out coordinate the existing coordination structure and create a new one in its place. And I saw Ethereum and I recognized it as a coordination engine. And I was like, this is a tool that we can use to scale human coordination. And how do I tell people about this? And like, how do I get people to see what I see? And I was like, I'm going to call this thing MolochDAO. And MolochDAO was a charity, essentially punk rock, open source charity to fund Ethereum development. Got money from Vitalik. Lubin's got like $3 million right now. Funded a lot of important stuff like Tornado Cash. So in doing this, I was able to get people to read that blog post to understand where I was coming from, and also understand, because there's a lot of Ethereum utopianism, where Ethereum just assume, like people just assume we're going to win because like we're first and we're the best and it's going to always be that way. And I think it's important to recognize how not true that is. And it's like only true to the extent that, Ethereum successfully accomplishes its goals, outcompetes other platforms. Like it does not exist in isolation. It exists in a highly competitive environment. And, we shouldn't be arrogant in assuming that it is, destined to work. So I also wanted to point that out to people.
Yeah.
And then with Reflexer, the money god, I was trying to imagine how I would feel about a thing that was like lasted 100 years and just ran itself. Right.
Right.
In the same way that people in Bitcoin feel a sort of divine devotion to Bitcoin, because it's not like, you know, a company. It doesn't have it's a global network, you know, fixed schedule. Nobody has been able to successfully change it. No, it doesn't seem very likely that anybody will. You can project out Bitcoin, you know, 50, 100 years, maybe longer, and say this will still be there. And so you might like believe in it as if, you know, it is almost like it's your religion, right? I believe, you know, I am part of the you know, force to help bring Bitcoin to the world, because, you know, if we do this, then it'll last 100 years. And I wanted to capture some of that sentiment for Rai, because we have similar goals. Money God, you know, you can't argue with a money God. You can't you can't you know, like control a money God. You do what the money God says.
Right.
The money God controls you, right? And so I wanted to capture that as part, you know, part of the social scalability, part of the governance minimization, because I believe that it's possible that this thing might work. And that's enough for me to want to dedicate, you know, time and effort into making that reality happen, and trying to recruit other people who share the same vision. If you don't care about Ethereum, if you don't like Ethereum, I don't care about you. You're irrelevant to me. You're irrelevant to the goal of the project. Like, I'm not talking to you. I'm talking to the people who you know, want to see this work, and you know, want to help contribute to making it work. And you know, maybe they don't like money God. Maybe, you know, I'm not trying to push, you know, I'm the last person to try and push something like that. I do it because I think it's funny. And to the degree that we can create our own gods, you know, God sort of doesn't have power.
That's so interesting. So cool how, like your background and upbringing, it comes from this place of having this, you know, religion imposed on you, and, you know, having this just like very traditional upbringing from a god that comes from up in the sky, and then kind of reimagining that into like with Moloch, a human-driven like coordination system, and just putting Ethereum in that light as well. And then with Rai, a little bit of the opposite, kind of this other divinity, which is just like programs based and something that can last forever without humans. Super interesting. So we are coming to the end of the hour, but I wanted to spend a second talking about your, I guess, like DeFi activity and how that kind of has turned out for you.
Sure. Yeah. So we got really lucky. That's the short version. I was through Spank Chain, you know, one of the earliest liquidity providers in Uniswap. Somebody told me about it, and I was like, "This is dumb." You know, within like days of it existing. And I read the code and I was like, this is genius. Like, they just turned providing liquidity into a money Lego. Like, I can just put the liquidity in my multi-sig. Like, I'm going to do this. And so I tried to put, you know, as much money as I could into Uniswap liquidity providing, and just kept it there for 2 years. And I actually faced a lot of harassment because people were like, why aren't you applying to the centralized exchange? You know, why aren't you listed here? Like, go apply to this. And I was like, I don't want to deal with sketchy market makers. I don't want to, like, you know, have to manage a bot if I want to do it myself that like maybe goes offline, right? Like, Uniswap just made my life a lot easier. And the end result of that was that we were very fortunate to receive a large chunk of Uni. Much of it we cashed out to our you know, token holders. And one of the places that we've put that Uni is into this house that we just bought in Las Vegas. And you can see that I have absolutely no furniture because we just got here.
Amazing.
And my only piece of furniture is this one little unicorn cushion that I have.
To those listening, there's a huge house in on the video. You have to check it on YouTube. There's a pool outside, and then there's a tiny unicorn stuffed animal, and it's the only piece of furniture in the living room.
Yeah,
very cool.
Just
a homage to Hayden.
Thank you, King Hayden.
Well, awesome.
And MakerDAO, because we put all the uni in MakerDAO to draw DAI to help cover our cash flow for this.
And it was the inspiration for Rise. So yeah, very important.
I'm grateful. The last 2 years were fun because, I showed like my mom and some of her friends. I did a presentation. They're asking like, what is Ethereum anyway? I was like, showed up and I was like, showed them the total value locked chart on DeFi Pulse. Mm-hmm. And I was like, look, from here to here, 2018 to 2020, mid 2020, we were idiots. No one cared what we were doing. And we were all poor. And then from mid 2020 to now, it's like, the total value locked exploded. Suddenly we're right. We're geniuses. And this is the future of finance. And so I'm just stoked to be part of it. And, grateful.
Awesome. Well, yeah.
Be here.
No, amazing. Really great talking to you. I mean, thank you so much for spending this time. Such an interesting conversation. So really appreciate it. And yeah, we'll be definitely covering all of Rise developments. And I'm sure you won't stay still for long, and you'll have some other crazy project up your sleeve soon. So thanks again.
Cool. Thank you.